investors.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Okay, folks, this is Larry Pesavento setting in for Tom O'Brien, and what I've done here is post the E-mini S&P as of the low yesterday. And as you can see, I believe in AB equals CD patterns, and we were looking for the market to get up to this level of 141.40. We've been to 41.30 so far with a little more time to go. I hadn't checked recently where the last price was. The last time I saw it, I think that's it going off now because I hear the beeper going off, so that must be it. So hold on, and by golly, there it is at 41.37 in the S&P. Who would have ever thunk it? Anyway, but the number we're really looking for, folks, is 41.41. We're almost there, and so we'll pay close attention to that, and we'll see what's going on. We've got gold up about $25 now. We got the bonds just went from negative to positive with the flick of the wrist. Evidently, Mr. Powell has come on giving some words of wisdom about the 25% basis point thing that we had. So all I do is follow the charts, folks. That stuff is, even though I got a couple of degrees in, finance and stuff and business, but I swear to God, I've never been able to figure out the fundamentals of what they're doing. But the one thing I can do is I can tell whether prices are going up or down, and that's valuable. And I do that by looking at AB equals CD. If you got higher bottoms, it's going up. You got lower tops, it's going down. That's pretty much what you want to see. Now we're going to take a look at some stocks here that we follow not very often on our program because we do mainly futures and Forex, but the four major stocks that we follow, and we follow them occasionally on the show because people are so involved with them, they have questions about it. So the first one we're going to be looking at today is Appel, Mr. Appel, who's down by the well. You'll see here that we've had a beautiful ABCD completing. Now, this low that we made here, down in this area, folks, around the 124 level, that was a 382 on the long-term weekly going back to 2019. So that's a major, major bottom. And you can see here, we've had a really strong rally here over the past 2 weeks. Not as strong as some of the others, but it's still been quite healthy, to the tune of about 8%, which is pretty good. Now, the next one we want to talk about has been in the news every day, and it will continue to be as long as Mr. Elon Musk is running the place, and that is Tesla. So what we're going to do now is take a look at Tesla. It is up big from the bottom. If you remember, the ABCD on this measured to 109. On this day right here, there was some really bad news, and the market went below that 109 by $3 to 106 and has been as high as 177 these last few days. I don't know where it is today. All I know is that if you look at that price that we made at 175, that is the 38% retracement of the all-time high in Apple. So that's a big move, folks. We've gone from 109 to 175 in 3 weeks, and that's a big move. I know a lot of it has been short covering, but short covering counts just as much as people going long if you're in the equity side of this thing. So remind ourselves, folks, these things, when they move, they can really move, very, very dramatically. Now, the next one we're going to take a look at is Facebook. Now, this stock has not budged at all, and I really believe that something is wrong with this company, and the people that are fleeing this are much like the people that are fleeing the cold weather here in Arizona. But look at this, folks. We've gone from up in the triple digits, down to, a very, very small amount of that number. And that's huge. And not only that, no bounce. Look at this. There's very, very little bounce here in Facebook over the past couple of weeks. That is not a good sign of support, folks. That's just telling you that minor support is there. If this was really supportive, you'd see it like Apple and Google and some of the others, the fact that they're rallying quite a bit. But unfortunately, Meta or Google or Facebook, whatever you want to call it, is under severe pressure, and it doesn't look good just for the fact that investors don't seem to be interested in it at this time. You know, they loved it when it was 150, 160. When it was down here at around 25, I mean, it doesn't have any friends, as you can well imagine. So that's an important thing to factor in when you're looking at these things. Now, the next stock that we're going to be looking at here is Amazon. Let me get this up here, and you'll be able to see it. Now, we were doing the bottoms on these stocks, way back in December and January, folks, when these bottoms were being formed. And we talked about the fact that the market has a bias for a positive January, and here we are 3 weeks into it, and we've been up every day since January 4th. You can see the bottom here that was made here at 81.5. The low was, I think, 81 3/8, and now we've gone all the way up to this level here. You see we're heading towards this ABCD pattern up here that's going to put it back into triple digits. And I think we might have been there already. By golly, we have. We hit triple digits. We're back to 103 today. So we've had a nice move of really 22% in Amazon since January 4th. So that's telling you there's been some strong buying coming into the market. Now, will this continue? I am not sure. But you know what else, boys and girls? Nobody else is either. All we can do is take these patterns, put them in perspective, and say, yes, they do have a predictive quality behind them, but they also fail. And when they fail, that's telling you a great deal of information, especially when it's related to the trend. Now, let me show you an example of this. Here was the E-mini. I'm going to bring a different chart up on the E-mini just to show you where we were yesterday. Because at that point, you'll see we were making a beautiful 1-3-5 pattern, 1, 3, and 5. And that means there's going to be an A, B, C, D on this market very, very shortly, going up into the much, much higher level that we were just posted here at around 146. So far, the high of the day in the E-mini S&B has been 144. So that's pretty close to the level that we were watching to see if it was going to hit. But it's close. That's all I can do. Well, within 1 point, that's pretty close. So let's keep an eye on that, too, for today, because the Fed will be done speaking here, excuse me, in just a moment, and then the markets will start to simulate the news that he talked about, and they'll have one person saying one thing and another person saying another thing, and the only thing that counts is the buyers and the sellers, and they're different fellers, and if they come in and change their mind, the market can easily go 500 points up in the Dow Jones and 500 points down in the Dow Jones is not unusual anymore, because these markets are extremely volatile and they react on the tightest of sensitive news. As a matter of fact, when we were getting ready to build our programs today, we were noticing that the price levels on some of these things to get our level was high. Let's take a break. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. Educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. This is Larry Pesavento setting in for Tom O'Brien, and I wanted to review what we've done so far in the Dow Jones Industrial Average. If you'll notice here on the far left-hand side of the chart, on the left, you'll see a yellow, beautiful butterfly pattern. It looks like a butterfly because it's drawn like a butterfly. It makes a new high with a perfect A, B, C, D pattern right up in here. And then it starts its move down. You see the first A, B, C, D to the downside. You see the larger ones, and finally, you see the final A, B, C, D from A, B, C, D coming in here on the Dow Jones. And look what we've been able to do since that run-up. You'll see that dark black line there at the very end. That was a 382 retracement in the Dow Jones, folks, off of that. Now, this is an incredibly bullish pattern because the fact that we could not take that out tells us that the market could be extremely, extremely bullish as long as we don't take that out. And as you can see by the action that we're having here today, whatever the Fed said to begin with, it was taken as bad news, and then Powell came in and put a new coat of varnish on it, and guess what? It turned out to be bullish news. So that's why you got to be able to have a tongue-in-cheek when you listen to what these dudes are saying, because sometimes I don't even think they know what they're saying. I remember Alan Greenspan was on Johnny Carson or somebody once, and he said, he made the comment, he says, I don't know how anybody can understand me. And he actually made that comment. And if you ever heard him speak, it was pretty much that's the way it was. Volcker was totally different. He was a straight shooter. When he said that the horse was gray, that horse was gray. If he said the car was blue, the car was blue. There was no ifs, ands, or buts about it. Other Fed chairmen, not so much. But this fact that we made this 382 is extremely bullish because we were able to make a 61% retracement in the S&P and also in the NASDAQ and also in the Russell. But the Dow Jones, folks, is different because it's only 30 stocks And believe me, 10 of them run the whole thing because they're they're price weighted and not cap weighted. In other words, it's not the price of the stock, it's the price of the stock that is involved, not the capitalization. In other words, the total number of shares outstanding, divided by the price tells you the capitalization. But the Dow Jones is not that way. It's made by a price activated thing. This is the reason why you don't have the E-mini S&P as the lead contract. Back when Leo Melamed was trying to put this together back in the early 80s, the Dow Jones family, Dow being their family name, they did not want them to be associated with commodities at all. And so they weren't interested at all. The only reason they got interested in is because Leo had the Chicago Mercantile come out with the E-mini S&P and then also the NASDAQ a little bit later. And that told them that, wow, these things are here to stay. So then they wanted to join the party. But unfortunately, the party had already started and they wouldn't make any changes. They were trying to get them to make the Dow Jones a cap-weighted index, but they wouldn't do it. They wanted to keep it a price-weighted index. So Leo Melamed worked around that, and that's why you see it to this day. And it's still lagging because only 16 stocks of that darn thing run the whole darn mess. The rest of them don't even count hardly at all. That's how important it is when you're looking at some of these things. Now, I think that's a good thing to keep in mind. Now, I want to give a plug here for our good friend Jeff Hughes at Alpha Insights out in Minneapolis. He's got some really great stuff. He's a guest on our show quite a bit. He'll be on a week from today. Jeff will be on. But I want to show you the type of work that he does, folks. Look at this beautiful double top pattern that he pointed out and said that the market was getting ready to have a substantial break. And that's what he's doing. He's managing his portfolios by risk control. And when he sees patterns that unfold, whether it's a cup and handle or a 3-drive pattern, an ABCD, or a double top, double bottom, he knows to react to those things. He's not so much interested in the fundamentals, he's interested in the technicals. And when he sees a technical line up exactly like what it's supposed to be doing, then he has an interest. As you can see here, it has a double topping pattern, and it proves to itself that it's a double topping pattern, because if it weren't, it would have gone higher instead of lower. And that's what triggers it. Now, you can say the cart comes before the horse, but we don't know. But all we know is when we see a double pattern, we want to know if that horse is riding in the right direction. And as you can see, it changed direction, and that's what you have to be looking for. Folks, it's not how much money you make, it's how much money you don't lose. You've got to remember that. It's the main thing about investing and just about everything else in life. Keep your losses small, let your profits run, and you're going to be a whole lot better off. That's the main thing. One of my favorite books of all times is Reminiscences of a Stock Operator by Edwin Lefevre. It's a story of Jesse Livermore and how he made his fortune, how he lost his fortune, how he made it back, but all the trials and tribulations of all the things that went wrong with him, to listening to speculators, people that were panning off, insider information or stock tips and stuff like that. And believe me, folks, when you're a neighbor at the family gathering, it starts giving you indications of where a stock is going by the information he got from his broker, who got it from his broker, who got it from his broker. Run away from that guy, because those never work. I've been doing this business 62 years, folks, and the number of times that someone ever told me something that worked, I can count in one hand, and I can't even remember the 5 things. That's how rare it was. It just never happens that way. I was at Drexel, and they had all kinds of rumors that would come in from different places. And, they tried to factor out which were rumors and which weren't. So basically, you had to decide for yourself. And you decide for yourself by either looking at your chart or reading the profit and loss sheet, whatever it happens to be, to tell you whether you're going to have a chance of doing it. I like reading the charts because the charts are telling you something. Because if prices are going down, there's more buyers or more sellers, and the prices are going up, there's more buyers. And look at these stocks, folks. Look at Metaverse or Facebook. Look what it's down 80%. Netflix down 90%. And well, not anymore because it's rallied 120% here recently. Apple is down quite a bit. Every single one of them is down. And that's not a good sign in a bull market, because, people lose their luster and they don't come back to the party very often. So it's going to be interesting to see how these 3 young companies, well, Apple's not that young anymore, because it's been around for quite some time, but it still has to go through the trials and tribulations of, what they're going to be worth, whether it's a stock or a commodity, how they're going to be listed and stuff like that. Right now, Apple is being used as a proxy for some of the tech stocks. In other words, it is listed and the people are looking at it, but they're trading the heck out of it against a portfolio of other things, because Apple has been the leader of technology, folks. And if the leader can't lead up, that means the soldiers behind it are not going to be nearly as strong as if the party is taken care of by Apple, because that's been a big, big indication of what's going on with their telephone and all the other stuff that they have going on, the camera business, the cloud business. They got a lot of things that says this stuff should pretty go up, and by golly, it's not going up nearly as fast as it should. Anyway, we're going to take a little break here to pay a few bills, and then we'll be back after the break, and we're going to be talking about a few other things. Partly will be the crude oil market, because it's had a big move today. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, back. Sorry. Okay, folks, we're back. Larry Pesavento setting in for Tom O'Brien. We've got gold moving substantially higher, folks. It's up $26 And we're approaching that very important level of 1975 in February gold. That's a 78% retracement of the whole move, folks, over the last 10 years. So that's a big move. So we need to pay close attention to that. Also, the number to watch in the S&P is at 41.45 to 41.46. Right now we're 41.44. That's a 382 retracement on the the E-mini S&P, and many technicians are watching that. And the reason why they're watching it, folks, is that when you've got a open interest like we have in some of these things in the Dow Jones and in the NASDAQ and in the E-mini S&P, they're all being promoted by basically one organization, which is the Tiger Financial News Network. So it's important to remind ourselves that we need to be focusing on what we're saying in the financial network for our TFNN letter, because if we get off the beaten path and start talking about fundamentals that may or may not occur, that's not what our forte is. Our forte is looking at the prices and determine whether these prices are going to be active or not. They're getting reports now, folks, on some of these fundamentals things that I happened to be there today because there was a very severe accident, fire broke out at the same time someone was voting in California, and that was why I don't know the reasoning behind it. All I know is it's proved to be a riot, and the people are fighting in the streets, not to the extent that we had when Rodney King was there back in the late 60s when Watts was burning down. Not nearly as bad, but it's still bad whenever neighbor after neighbor starts beating each other up. That's not fun. And what's happened in Memphis, Tennessee is sad, and I know everybody is sad about it, but by golly, people are human. They make a lot of bad mistakes in life, and that was certainly one of them by 4 different people, and I know they're going to be at least I think they will be very sad over the last few years of their lives because of the fact that they took someone else's life that probably didn't really need to be. And I am done with the getting off my soapbox right now and getting back to the markets. Let's talk about the bond market, folks. The bond market's had a really strong rally here these last several weeks here. We got down into that 119 level. We rallied up to 138. We're now trading around the 132 level. But there's another market that was very important, and that is the euro market, the euro versus the U.S. dollar. And that market has been extremely strong. And I'm going to bring a chart up here and show you why it's been strong. And if you follow anything that we do here, we do follow these ratios very, very closely. And so just give me 1 second, and I'll have it up here so that we can take a quick look at it. You'll be able to see it. And you'll see it's been going up for quite some time here since late November. You can see at the very bottom down here, your three higher bottoms right there. That's a 135 pattern and a beautiful head and shoulders pattern. That's why the market exploded to the upside. You don't have to read the press reports or study financial data. Study the price patterns. If there's more buying, prices are going up. If there's more selling, prices are going down. It's pretty much that simple. Now, when that doesn't happen, that's giving you feedback that something's not right. If the market is really bullish and it's not going up, it's really feedback that a lot of people who happens to be in this stock does not agree with you. And so you've got to be able to scale back and say, okay, maybe I better look at a little bit more information. And that's what'll happen sometimes. It happened to me today because I didn't think that we would see a big move like we had in the bonds after being down as much as they were. They came back and took it all back. Plus they were setting positive the last time I thought. So that's a good sign from the perspective of having lower interest rates, but also it's a bad sign because if we have high food costs and stuff, and we've got this energy thing going on with our stocks and commodities and everything else, we're going to be strapped, folks, for getting food out to some of the people. They're already having trouble with, chicken fried steak and eggs and things like that. Eggs, folks, here where we live here in Tucson, eggs are $6.99 a dozen. Folks, 2.5 months ago, 10 weeks, eggs were trading for $1.09 a dozen, and if you bought 2, you got 1 free. If you bought 2 dozen, you got 1 dozen free. Now, 1 dozen eggs is running $7.99 to $9.99, depending upon the store that you're buying from. The Wild Oats store, not Wild Oats, Oh, anyway, this is a stock market hitting the price levels that we've been watching for, folks. We just hit it, and the Dow Jones just hit it also. So this is, we're going to find out. There's the number 4146 in the S&P. So let's keep an eye on what's going to be happening with that. So I've got to turn off my alerts because they're making so much noise. I can't think. Let me turn it off. I got that one turned off, and I got this one turned off. I just want to see how high they go over these levels that we're looking at right now. So it's going to be interesting, folks. But remember, when we were looking at this last night and the night before and the night before, because here's where the big pattern was. This is you can see last night's low, and all you have to do is to go back over the last 5 or 6 days, pick out the low that was there, and that'll get you to the promised land where the AB, you can see it. There's your AB leg right here. There's A. There's B, there's C, and then there's D, and D's continuing to go higher. It looks like we're going to go to about 124 in the E-mini S&P, 154 in the E-mini S&P for today. Looking at it, and we've been waiting for that to happen, folks. We've actually been relatively friendly for the stock market the last few weeks because of the fact that we've had higher bottoms and lower tops, and that's a sign that the market is bullish. That's the bottom line of what we're watching. So let's keep in mind of that. Here is a shorter term version. Now the difference is this version here is using a different contract. Hold on a second. That's not the way we want to get it. Hold on. This is now, we should be trading the the March contract now, and we're still trading the December. Here's the December here. You'll notice that we're right up against this old double top. All this stuff is right pretty much where we are right now. And that's with the February contract, which will be going off the board shortly. So that's why we're watching. You can see the beautiful 3 drive to a bottom pattern. It's also, there's drive 1, drive 2, drive 3, right up in here. So we're going to find out whether it has much follow through to the downside, because a lot of these folks here that are in the pub area of the university here, and we will get an idea of what they're saying as far as whether they think the stock market's going to go up or not. You'll be the one to ask the interviews on that, folks. I am not going to touch it, because people are very sensitive about the stock market most of the time, because they all have that fear of missing out or the fear of leaving money on the table. They don't have the fear of putting money in the table because they don't want to put their own orders in, and that's it. I just heard that the policemen in Memphis were all fired now and are facing charges. Well, we'll see how that goes out, but knowing attorneys, folks, they're going to find loopholes on both sides, and that's what our legal system is about. At least it's fair, and you're being judged by your peers, and that's what you're supposed to be doing here. So let's continue to think that's the way it is. At least we get to see what's unfolding, which is a good time to see what's happening. So we'll take a little break here. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the opening call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Okay, folks, Larry Pesavento setting in for Tom O'Brien. I want to switch over to the gold market, mainly because of personal interest in gold. I recently had a very, very dear friend pass away a few days ago. From my days in California. He was an attorney, Jewish man, very heavily involved in the faith, and so they have to be buried within 24 hours or as close to that as they can. And so you die on Saturday, they bury you on Monday. There's no wake or anything like that, but at the service, there were so many old friends from Drexel there. I was probably one of the few non-Jews there, maybe a dozen or so, but they came. I had 4 or 5 people come up to me that I had purchased cougar rans and maple leaves for them back in, I'm talking about 70s, folks, in the 1970, 77, 78 area, and they still had these coins. One gentleman, he was 91 years old, and he's still in great health, great sense of humor. He said, I'm really upset with you. And I said, why is that? He said, I never got to enjoy those coins. And I said, Maury, what are you talking about? I said, you've had them for 40 years, for God's sake. They've gone up quite a bit. And he was laughing. He said, yeah, but I never got to buy anything with it. I said, Maury, that's because you got so much money you can't spend it. Anyway, the reason why I'm putting this up here is to show you that we are really close to some major resistance here in this gold market. It might even be today. If you'll notice that number that we're looking at there is 1975. I just saw a 1968 print in the April gold. So we're getting close to what we think could be some major resistance up in here. So this is going to be interesting. You'll notice that last move that we had came after, you'll see the bottom that we had down in this area came in at exactly a 382 retracement, and that measures up to where we're trading right about now. Well, I'm looking at the ratios. If you see these red boxes that are there, that tells you all of these swings that are here are related to these 2 red boxes. In other words, a swing down is either a 1.27 or a 1.618, and they all come in within $10 of each other. So my assumption is, because mathematics precedes geometry, as Mr. Hold on one second, I've got a frog in my throat. Albert Einstein said that, mathematics precedes geometry, and so remind ourselves of that because we're getting close. Now, this is not selling to be a sell order up in here. It just says we should have a substantial correction of at least $150 to $200 an ounce from this level. Now, that remains to be seen, but we'll find out. If we start going above this level, folks, we could be looking at gold prices somewhere in the neighborhood of $2,500 to $3,200 early this year sometime. I'm talking in the springtime, May probably, right before summer approaches. But and it's supposed to top sometime this year, based on the long-term cycles that we just heard from Bill Meridian of Cycles Research in Vienna, Austria, was on my show just an hour or so ago, telling us that he thought that sometime in the spring we'd be seeing a pretty substantial high up here in the gold market, and we're really close to it as we speak. I mean, we were down yesterday, and it came back like a rocket without even anything going on. So that's an important thing to remember. Now, I want to switch gears here a little bit, because many of us are not involved with this next commodity, but it is one that has been around for quite a while and is causing a great deal of news across Europe and also here. And that is, this is the price of natural gas. I want to show you folks how much this has come down. You'll notice here, we're making lows now that we haven't made in 3 years. Just last year in November, we were trading at $10. And now it's trading at 2.50, folks. That is a monster move. That's over $80,000 a contract. In other words, that's how much somebody's gotten hurt by staying long natural gas, and some people have. I can imagine, because I've seen it happen many, many, many times in this business. They just will not get out. Eventually, they're going to get out of one, either frustration. We would put castration in there, but that might be the other one. But it just could be the fact that they just give up and they just can't do it. When that person gives up, then you can be sure that natural gas will be making a bottom. But don't be that person. You don't have to be that person. You don't have to. You can try to buy a bottom, but for God's sake, don't stay in front of it. The first mistake teaches you. The second mistake kills, okay? The first mistake is you go into the trade, but the second mistake is you don't do anything about it, and that's what you have to do. The trading starts after you put the order in, folks. That's when you got to determine what the heck you're doing, because you got to focus what the energy level the risk level has to be. So that's why it's so very, very important to learn to do that. And this happens to be just one of them. Look at people that bought ARK and Facebook and Netflix. And, Netflix has come back 50%. But some of these others, they're Amazon, Google, many of them have just been trashed, quite a bit. Shopify, I mean, there's one after another that have gotten cremated, just like they did in the dot-com bubble. Remember that one? That was the easiest one, when they were talking about companies that didn't even have sales were doubling in price overnight. But we had stuff like that happening with the cryptocurrencies, and who knows what's going to happen with that. The one thing I do feel strongly about is the blockchain business, or cryptos. It's still here. It's going to be here. The reason why is the Chicago Mercantile Exchange put their 3 years ago, put their handle on it and say, yep, we're going to bring this to the market. And when they don't bring things to the market that are tulip bulb related, folks, never happened. Those fellows over there are really, really smart, led by Leo Malamed. He's not the chairman, but he certainly, whenever they have a question, they ask him, because he's got the experience, and gosh, he's got the sixth sense of a fighter pilot or a rattlesnake, man. He knows when danger is approaching, and he'll keep you on the right side of these things. So he believes that they're here to stay. Maybe not to the extent some people think they are, but they will be around, it looks like. So those are the things that we want to pay close attention to. Now let's see how we're doing here. We got up to our number. Our number we were looking at was 46 in the S&P. And we hit a high of 63. We're now down, believe it or not, in a matter of 5 minutes, we're down 20 handles again to 40.41. So very interesting moves that we're having here. So very, very quickly here today here in the E-mini S&P. When they break pretty fast. So that's the main thing that you got to remember. And it's not how much money you make, folks. It's how much money you don't lose. Focus on the losing, and the winning will be there when it happens. Because everybody can pick up a blind hog picks up an acorn all the time. So you can do the same thing. But what you got to do is, you just can't be picking up stuff and not doing anything about it. It's the first mistake. is to buy it. That's okay. The second mistake is you don't do anything about it, and that's what's really, really tough. So remind ourselves, folks, it's not how much money you make, it's how much money you don't lose, and that's the real key to looking at what we're looking at here today. Okay, so we're going to take a break here, pay a few bills, and when we get back, we're going to be giving a quick review of what's happened today, and we'll go back with you in just a little bit. 877-927-6648, and we'll be right back.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selected stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're back. This is Larry Pesavento setting in for Tom O'Brien, and boy, we have a hyperactive stock market today, folks. Just a few minutes ago, about an hour or so ago, when the Fed was speaking, the Dow was down 350, then it rallied to be up 350, and now it's back down to today, folks. It's had a 1,000-point swing and hasn't gone anywhere, but now it is down on the day. Now, the chart that I posted here is the E-mini S&P going over the last 8 or 9 trading days. And as you can see here, we had a price objective measuring to 41.46. The high was 41.63. And now we've broken, well over 40 points down from that level. So this is a completed ABCD pattern. The $64,000 question is it going to go back and close above 41.66, given the fact that we only have about 5 minutes left to go in the day? The answer to that is a qualified probably not, but we have to watch it over the evening to see how the markets are going to be handling these different ideas of what's gone on in the market the last few days. Now remember, folks, just because one person passes away, that doesn't mean that's going to be a big event in the market. It's a compilation of everything that's going on out there. And that's one of the reasons why being a technician is all you have to know is that prices are going up, there's more buyers, prices are going down, there's more sellers. That's really all you need to know. Once you have that figured out, the rest of it is pretty doggone easy. Like Mark Douglas used to say, trading is simple, but it's not easy. And your job is to keep it as easy as possible. So keep that in mind as you're looking at these markets today and watching them unfold the way that they are, because it will be great opportunities in everything that we do, no matter what. So live every day in an attitude of gratitude, and may God bless.